Michael is a financial analyst and president of the Institute for the Study of Long-Term Economic Trends. He's also a distinguished research professor of economics at the University of Missouri, Kansas City, and also professor at the School of Marxist Studies at Peking University in China. Michael has served as economic advisor to many governments, including the United States, Canadian, Mexican, and Latvian, consultant to UNITAR, the Institute for Research on Public Policy, and the Canadian Science Council, among many other organizations. Michael is the author of over 10 books on issues related particularly to money, finance, rent, etc. So, Michael, please go ahead.
Well, since the earlier speakers have already been very clear on explaining what inflation is and where it's going, since I'm an economist, I'm going to talk about what economists talk about, which is what isn't inflation, and what's the excuse, and what economists like to blame it on labor at rising wages, on government social spending, and of course on Russia trying to break away from America's unipolar international order. So, sorry, inflation is basically the excuse that right-wing governments have for trying to lower wage levels by blaming the inflation on rising wages. Federal Reserve Chairman Paul Volcker raised interest rates to 20% in 1980 to cause a recession because he said it is worth causing a recession that will lead to less hiring and stop labor's wage gains in the 1970s. He was my former boss at Chase Manhattan in the 1960s, and he was always said that the big concern of finance is wage gains will mean that the purchasing power of all of our investors who have bank accounts and stocks and bonds will have less power over wages. And our class interest is in increasing our power over wages, so we've got to keep wages down, even if it causes a recession. That's basically the Federal Reserve's policy. That's what monetary theory is all about. About a month ago, the present Federal Reserve Chairman, Jay Powell, came right out and announced that the Biden administration's Democratic Party policy is, quote, to get wages down and to get inflation without having to slow the economy and have a recession and have unemployment rise materially. In other words, you want to keep the finance, insurance, and stock market, real estate sector going. You just want to squeeze down wages somehow. So the objective of all this is that if labor wants to get a job and the health insurance that goes with it, then labor will have to lower its wage levels. That's the current US government policy. Well, it's junk economics, of course. Today's inflation throughout the world, not only in the United States, but in Europe, is led by pure monopoly power, headed, as the previous speakers have said, by energy and food prices. The United States and NATO, they're trying to blame inflation on Putin and Russia not exporting oil and gas to Europe as a result of the NATO sanctions against it. But gas hasn't stopped yet. And until a few days ago, on Thursday, the US oil companies have said that looking forward, they see a supply problem. And they're raising prices now, even though the supply of oil hasn't really changed at all. So you have supply being fairly constant, prices going way up because the oil companies say, we anticipate they'll go up, therefore we're raising wages, raising oil prices because we can. Well, the same thing is happening in agriculture. Farmers are getting much less for their crops, but the great intermediary monopolies like Cargill are taking and raking off much more commission income and buying crops cheap. So the farmers are getting lower prices for their dairy products, their milk, and their crops, but prices for milk and crops are going up in the store. Same thing, you're also having rent rising as a result of the plunge in home ownership rates that started with President Obama's mass evictions of the victims of junk mortgage lending in the, under his administration, and the private capital investors that are taking over all of the houses, the owner-occupied houses that have defaulted, they're being sold off, and you've had home ownership rates falling by about 10% in the United States since 2008. Well, now you have companies like Blackstone very sharply rising rents. In New York, they've been jumping by about 1/3 in the last year. So again, with the same amount of real estate, prices are going way up. So none of this can be blamed on labor. None of this can be blamed on money creation. And that's the other thing the government's blaming on. You have the Republicans always saying, well, the real cause of inflation, as Milton Friedman said, is too much money chasing goods, and all the money, they say, comes from running budget deficits. So they say America has to stop running a budget deficit. Of course, we have to give more money to NATO, more money to the military-industrial complex to produce arms for Ukraine. That means we have to cut back social spending very substantially. And in fact, the Biden administration has been cutting back spending against the pandemic. So that's the situation here. The earlier speakers have talked about the global South countries, especially Africa. And they have an added problem that is going to cause inflation there over and above what's been talked about today. And that is the drain of their debt service on their dollarized foreign debt. Now, the US dollar is soaring, especially because interest rates have been rising in the United States. Well, when it soars, it's largely because of the Federal Reserve policy. This has already led the euro to plunge, and it's going down towards €1 per dollar rate. And the Japanese yen has also plunged by holding its interest rates low. There's a large outflow of the carry trade to borrow cheap in Japan and buy US dollars and other foreign investments. So the exchange rates of many third world countries are also beginning to decline because of energy, because of food, and also they have their foreign debt service coming due, and the dollars are much more expensive. So this forces them to make a choice. And that choice is the intended policy of US economic strategists. Either they're going to have to cut back on their food and their energy imports, or and pay their foreign bondholders, or they'll have to pay the foreign bondholders. That's the choice. Who's going to get paid, the bondholders or their own people who need food and energy? And the question is, what are the client oligarchies going to do? Well, they're going to serve the bondholders more than their own populations as usual. And Janet Yellen, the former Federal Reserve Chairman and now Secretary of the Treasury, said that the upcoming IMF meetings have to create a new backing for the unipolar world economy run by the United States. And she said the way to do this is by creating new special drawing rights, SDRs, paper gold, most of which is going to be given to the United States. And it'll also be given to global South countries to enable them not to default. They'll just borrow more from the IMF. But to do that, they have to submit to IMF austerity. They have to believe what the IMF says inflation is caused by. The IMF traditionally has said, you can afford higher oil prices, you can afford higher food prices, just cut your labor and living standards. That's equilibrium. Equilibrium is the bondholders get the money, you don't. Equilibrium is labor standards go down and down and down. That's equilibrium defined as how can America continue to live in the lifestyle it's living in without actually producing more, while it's actually industrializing. How can it live by financial means and by imperial means without being an industrial economy, without without being more productive? So the SDRs are going to be conditional on countries selling off yet more of their domestic resources, selling off yet more of their raw materials, oil, their land, their real estate. The IMF said, all you have to do is sell off your assets and the capital account will balance the current account, the trade account. So obviously, this is an opportunity for the United States to lock in its control over debtor countries, over Europe. Now that Europe is having to pay much higher prices for its oil and gas, it's becoming much less competitive with other countries. That's why the euro is falling. Japan is continuing to decline. So the United States expects to be the beneficiary of this inflation because its oil companies control the world oil trade. And if oil is going way up in price and gas is going way up in price, this is going to be an enormous benefit to the US balance of payments, and oil company stocks are already soaring in price. The military industrial stocks are all soaring in price because Europe and other countries are told to pay much more for their arms to fight against the victims of the NATO war against Russia actually fighting back. So the war in Ukraine has become a windfall for the United States. And the US is using this, the inflation, to push its junk economic theory, saying that, again, as I mentioned, the cure of inflation is to cut back on government budget deficits. So right now, in the middle of the COVID epidemic, and in the middle of food and energy squeezes, countries are told to stop subsidizing their fuel, stop subsidizing their food. This means that even as labor's wages go down in the global south, they're going to have less of their shrinking wage income to be spent on goods and services, because it'll be spent more and more on imported oil and gas. That's the squeeze that they're in. Well,
if you wrap up, Michael, yeah. What? If you wrap up soon.
Yeah, that's basically it. What is inflated today is being asset prices, not commodity prices, except where monopolies are controlling a rising share of the market. So we're having really the monopolies and the rentiers fighting back under the guise of fighting inflation. I'm Michael Hudson. I'm appearing here for the International Manifesto Group. If you like this video and ones like it, please subscribe. For more information, go to the address on the screen.